Hello, everyone. Welcome to the Move Smartly channel. Today's episode is The Situation, our reoccurring monthly Q&A, where John responds to consumer questions. You ready, John?
Ready to go.
So today I thought we'd do something a little bit different. Viewers will know that we get very specific questions normally, and we invite you to send those again about moves that you're trying to make in the GTA. Should I downsize now? What about the volatility of the market? And, even more complex situations. So you can send those, as always, to askjohn@movesmartly.com. But today I thought we'd cover a different kind of question that we get. One that's a little bit more, I would say, wider view, responding to some of your bigger thoughts on housing in general in the GTA and in Canada.
Sounds good.
So, John, you write really frequently on the market, on policy, and the what we would call, I think, fairly the affordability crisis in housing in both Canada and the GTA. So that's what a lot of these questions that we're getting in kind of touch on. So here we go. I've grouped them a bit.
All right.
And because some of these questions are a little bit, let's just say, a little bit more, asking you if you really know what's going on.
Oh no, we got some of those today. That'll be interesting.
The last one. I think whenever you see a really volatile market like we're experiencing, I think people are very stressed out. And what I notice is that there's an uptick in, skepticism, some of it's genuine curiosity. And then, of course, we're going to get to some trolling questions at the end too.
Trolling questions too. Okay. All
right.
But,
I thought it was interesting because I think inside all of these questions, even though not all are asked the way I was raised to ask questions politely, please, there is an element of frustration, obviously, and just real confusion because we're in the middle of historic low sales, yet prices are still going up, it seems, or about to, as we'll see. So, understandably, people are not happy. I think that's the best way to put the situation out there. Not happy, and concerned. So let's start with group one. So under question one, a very thoughtful, longer question we received on, and I paraphrase this as, on immigration, John, are you making the mistake of conflating short-term pressures with long-term realities?
Okay.
So now let's read the full question. Hi, John. I've been following your channel on Twitter and listening to the podcast regularly. May I just say, wonderful to have a podcast viewer chime in. Two headlines that are constantly have me pondering are, we need 1 million plus homes in the next 10 years. 2, Canada is to welcome and choose X amount of immigrants in the next 5 years. I believe the target is 500,000 per year.
Yeah, by a couple of years from now, it should be 500,000. Yeah.
Yeah, so moving
That's
up
just
to that
immigrants,
target.
though. That doesn't include non-permanent residents, but yes.
All right, so these are the headlines that are have this viewer pondering. I am wondering if this takes into account the potential for an increase in the supply of homes in 10 to 15 years when we see a large portion of our population, baby boomers, start to unfortunately die off. Anecdotally, all of my family and friends have aging parents who will never leave their 3+ bedroom homes. When I look at population charts, it seems like we don't have enough people to recover the soon-to-be aging, dying population. I guess I'm wondering if the housing problem we have now is more short-term than long-term due to an aging population. Part of me sees us having more than enough supply when the baby boomers are gone, assuming they all own their homes. I'm fully aware that asking anyone for information 10 years out is not really fair. I'm just trying to get a better understanding on the data. There is so much dinner conversation about our children being screwed because we don't have enough homes for them, and I am not entirely sure I'm on board with this movement. Thanks for your time and insights, Chris. And the reason, John, I posed my paraphrase as I did is that you've been writing on the mismatch between housing and immigration and warning and about the pressures that immigration numbers have been having on housing. So Chris is offering a bit of an alternate view, and I think it's a very interesting one.
It is a very good one, and I'll try to answer that. I mean, for starters, the 1 million that was mentioned, homes that we need to be built, it's actually higher than that. It's 1.5 million. If you listen to the province's forecast and a forecast from Mike Moffat, what's his firm called? The Smart Prosperity Institute, I believe.
Yes,
The think
yes.
tank he works with.
Yeah, and
Yeah,
we've interviewed him as well on our Move Smartly channel, so you can find that interview with Mike.
exactly. And CMHC's forecast, quite frankly, is closer to 2.5 million. And this is pretty much all with, I mean, CMHC's was by 2030, so under 10 years. But you know, the province's forecast, and Mike Moffitt's through his think tank is basically building 1.5 million homes in 10 years, which is more than double what we build, because we build about, you know, 700,000-ish or 650 homes every 10 years typically. Now, how do they get to those numbers? I mean, to be clear, those are not my forecasts. I don't do that type of modeling. But I can say, kind of going back to the original question, do they take into account deaths? And 100% they do. So when The Economist, and if you look at Mike Moffitt's report, which is fantastic, I mean, he actually revised it up. He originally came out estimating 1 million, and then he revised it by changing some of his assumptions in his model and got to 1.5. And some of those assumptions, of course, are assumptions about, you know, birth rates and death rates and when those are happening based on demographic trends, and of course, immigration levels and immigration rates. Now, of course, all of these are rooted in some assumptions, but of course, definitely one of those assumptions is at what rate, or what is the difference between, you know, the number of births we have in any given year versus the number of deaths, and how many people we expect to be moving to Canada. So I will say that they are factoring in those numbers. And I will add that part of Mike Moffitt's forecast, I'm pretty sure the 1.5, at least for sure in his original 1 million, was actually a forecast of what we need to catch up, because we've been underbuilding up until now. So it's not even, you know, we need these homes for the just the future population growth, which is true. It's also to catch up on what we've been underbuilding. And we can, quite frankly, you know, and a lot of people have this debate: are we underbuilding? Are we not? You know, and especially like if we want to just, you cannot just say, okay, well, prices are rising, it's proof that we're you know, that we're underbuilding. I mean, that's a very simple example, because there are obviously, of course, multiple factors that could be driving house prices beyond just a mismatch between demand through population growth or changes and supply. You know, there's monetary policy, of course, which is basically interest rates that can be impacting the demand for housing. But the place where we can probably see how this mismatch is having the biggest impact is the impact on rents. And rents have been surging in the GTA, quite frankly, and all across Canada. And rents don't surge because of monetary policy. They don't surge because of a bubble. They don't surge because of irrational exuberance. They surge because of a mismatch between the demand for housing and the supply of housing that we're building. And that has pushed, I mean, rents in the Toronto area are up over 20% in a single year, right? So I tend to believe this argument that there is a significant mismatch. And we're seeing that on the ground every day. So I do think it's going to continue to be an issue. And again, all things being equal, if immigration freezes, no one wants to move to Canada. You know, and that's actually partly what happened in the 90s. I mean, in the 90s, when we had a bubble, part of that was driven by a huge population boom in the GTA. And then in the early 90s, when we had a recession, population growth plummeted. And what happened is we had sort of this oversupply of homes, because a lot of them were built on spec, meaning no one had bought them. It was basically speculative building. And our population growth had declined suddenly, right? So we didn't have that booming population to absorb that inventory. And that's partly why the decline in house prices in the 90s took a while to recover, because we had overbuilding on the one hand, and our population growth had kind of dropped significantly. And I don't see that happening right now. So the long and short of it is, I tend to do buy that argument that we're underbuilding. But as I've written before, I mean, I do not believe what some of the economists are saying, that you can just simply snap your fingers and build 3 times as many homes in 10 years. I don't think that's possible.
So that's very interesting. Now, I think, so what I'm taking away is that we're adding to a gap, and that gap continues to grow. So, you know, when these population booms, mismatches happen, that results and maybe if builders aren't wanting to buy because there's now we're in we're in a down market, a lot of these small fluctuations actually keep adding to the overall shortage we're going to have long term.
Yeah, 100%. We're seeing that right now. I mean, our population is growing at a record rate in Canada. I think, like, I just did an interview on Bloomberg, and the number I think they had was, I mean, it's in Stats Can. I think it's like our population growth over a 4-quarter period was something like 880,000, which is just unbelievable. Like, it's, I don't know, nearly triple what it historically used to be. And again, this is not just immigration. This is immigration and non-permanent residents. But the point is, our population's booming, and is booming at a time that we know new construction sales and new construction starts are actually trending down, right? And to your point, this is going to continue to kind of put pressure on, if not prices, because rates are high, at least probably on rents. And if not on Toronto, we're starting to see it in other markets as people just leave Toronto because it's unaffordable.
So I do want to take up one thing, though. Let's take Chris's point, because I think it's a great one. Economic models can only quantify so much, right? So you spoke about how there are population births, deaths, it counts that kind of thing. How granular can it get into the type of housing that, let's say, current generations are holding and may turn over? Because I can understand what Chris is saying a little bit there about these overhoused baby boomers, you might put it that way, right? And underhoused new immigrants plus young people that continue to be born. I think it's a she raises a very interesting question. Can economic modeling really factor that in? I've read Mike's study a while ago. I didn't remember it getting. I remember that part of the shortage that they're predicting is in the very type of house that baby boomers tend to have right now.
Well, yeah, and I do believe Mike Moffat's report did take into account housing types, and I believe one of the things that they found is that we are significantly underbuilding low-rise homes, and low-rise, we mean like family-sized homes, like 3 bedrooms, whether they're detached or townhomes or row houses or whatever. This is the type of housing that we're not building, and 10 years ago, we basically we used to build a lot of low-rise homes and very few condos. And over the past 10 years, we've been building very few homes and a lot of condos. And this is what pressure on our market, because this is, condos, of course, are not, for the most part, are not big enough for families. And we're largely building small condos in Toronto, which are effectively bought by investors, because we're not building apartment buildings anymore. So our condos are actually almost like rental buildings for the most part. And we're not building family-sized housing. So they do take that into account. And the fact is that we have been significantly underbuilding those types of homes to begin with. So I can kind of see why they're arguing there's going to be a very big mismatch, because there already is one.
All right. So this idea that, somehow the natural, unfortunate deaths of the older generation will release enough of these single family homes to meet the demand is probably overlooking the fact that there has been a population acceleration in growth. So it's not all things equal. One goes, one takes over. Is that fair? Like, are they projecting, okay, this many single homes will be freed up because of the natural death rates of the older population, which tends to have that kind of dwelling. Even then, there is such a need. And his metric, like when they say enough houses, let's again clarify what we mean by that. Enough for it to be X price?
Well, no. So I believe the one for Mike Moffat's organization isn't necessarily to make housing affordable. It's just like to keep up with demand, basically, right? And his forecast was 1.5 million homes. The CMHC forecast of 2.6 or 2.6, I can't remember exactly what it is, was actually what was needed to make housing affordable. And based on some affordability metrics, that effectively means prices are coming down and rents are coming down to be more in line with incomes. So yeah, there is a difference between their different approaches.
Okay, well, thanks for that great question. We're going to add in our show notes of links to the papers that we've discussed. Mike's paper, I think, was called Baby Needs a Home.
I think that was the first one where he predicted
Yes.
a million. I forget what the
Yes.
second one was called, but
A
yes.
baby still needs a home. I don't know,
There you
but we'll put the links to the studies that John mentioned, so that perhaps viewers and listeners that are interested can look into a little bit more of how this modeling is happening. But I guess the short answer is probably are taking into account the housing stock that may be released as baby boomers age. All right, so let's go on to our next question. Do they get meaner? No.
I hope not.
Do they get more pointed? No.
They might.
I group these into a category called, aren't you missing the income part of the real estate housing discussion, John?
Okay.
And I'm going to quote directly from a commenter, I believe, on our YouTube channel.
Yeah.
So Parth Patel says, Steve, this is a previous guest, is making logical arguments without any biases. It might be a bull trap. 99% possibility is that prices can't go up anymore due to medium income levels. That's it. We'll see how good the predictions of people how good the predictions are of people who aren't in the industry. Sorry, I think there's a few typos there. And I think Parth was actually pointing to you, John, as being someone with biases.
With biases, okay.
Yes. And so why don't we go back to this point here that medium income levels will eventually rein in prices. I think this is in response to a comment you made that there are other forces at work, so that is no longer the one-to-one medium average house price, the connection to home prices. Can you tell us a little bit more of why you think like that?
So for sure. And let me unpack and maybe explain one thing he talked about, where he called a bull trap, and this is maybe in response to, I think, our last episode when I talked about the market getting busier and heating up right now at the start of the year. There are certain people who think that housing markets follow these very, very predictable patterns. They go up, they dip down a little bit, people get excited, and they go up a little bit down, the bull trap, and then they crash like 40%, and it's funny, I find sometimes when people think that housing markets follow these predictable patterns, because they usually don't. Nothing's been predictable about the past 2 years. But anyways, in response to, the constraint on income, this is, again, a funny argument. I think people have these assumptions about what is constraining or what the constraints are on house prices. And certainly incomes are somewhat of a constraint, but the reality is, if in traditional thinking, house prices should not be much more than 5 to 6 times household income. Well, the last time they were 5 to 6 times household income was, 10 to 12 years ago.
Wow. So that disconnect has started a long time ago.
A long time ago. And now in Toronto, they're close to 10 times household income. And there are a number of reasons for that. And again, I'm not trying to justify. I think people kind of misunderstand sometimes when I try to explain what's happening. They think I'm trying to, I don't know, what I get called a punker.
That you support it. Yeah.
I'm supporting it. I think this is
thing.
amazing. Yes. Obviously people who follow me don't realize that I tend to advocate for things that will dampen and cool housing markets, not inflate them. But again, I think it's important on this channel for people to kind of make sense of what's happening, because in a theoretical, in this model, in this idea that housing income is a constraint, this is all fine and well in a sort of 50 years ago. If you had small towns that did not have people moving into them, that not have a booming population, where interest rates aren't a factor either, right? But what has happened over years is interest rates have plummeted down. Well, when rates tend down, all else equal, you can borrow more, right? And this puts upward pressure on home prices. But the reality is, here's the bigger thing. You can only pretty much borrow 5 times your household income in Canada. That is pretty much the constraint, like that. And that's largely due to the stress test recently. Before the stress test, that was just the math based on interest rates. So you can borrow 5 times income, and yet house prices are 10 times income. Right. And, it just, to me, it just kind of signals that over time, at least in the Toronto area and some of these markets that appear to be very disconnected, home prices have become more driven by capital, meaning the money people have, the investments they made, maybe the money they're given by family, versus their individual household income, right? And this idea that 10 is a hard limit, and I think, you know, this person said it's impossible for them to go higher. I mean, Vancouver, I think, is like a 13 times household income. And I'm not saying Toronto will or should. I mean, I'd like to see Toronto go down, you know, 8 times household income or 7. So, but this idea that, you know, incomes alone are a constraint, I mean, they can be for some households, but it's not that simple, I guess, is my answer to that. And
Yes.
just assuming prices will never, or they'll tank back to 7 times income because of this is I think misguided. I mean, if prices tank, it's not going to be because of that. It's going to be because of a recession and job losses and all these other factors. It's not because of some magical ratio between house prices and incomes.
Yes. And I think this goes back to what you talk a lot about, what is the increasing financialization of housing. So when you talk about capital being the factor now, there's all kinds of ways that people are investing in housing beyond their just the normal image. And it's not just, you know, this, for many years, it was this idea of this foreign buyer just buying everything in cash, but it's also, as you've pointed out, smaller mom and pop, just individual families, individuals in Canada who see owning multiple homes is a good investment. They use we've gone through an unprecedented run of housing gains, right? For those who have been in the market. And so they're able to pull money out of some homes and, you know, help buy others or invest in others. And then at the same time, we're now coming, you know, rates have risen after 15 years of record, you know, low interest rates. So these factors together suggest that disconnect between income and home prices has a lot more to do with those previous factors than anything that's happening right now.
Yeah, I mean, and it's to expand on that. I mean, it's not even just mom and pop investors. I mean, our former Bank of Canada governor, Stephen Poloz, invested in a company called Key, and they're basically support big Bay Street real estate income trusts that raise tens of millions of dollars to buy blocks of condominiums downtown. Okay. So they raised, I don't know, 70, 80 million, 100 million, who knows what. They buy, who knows, like 200 units in over 2 projects. And these are condos. They're not purpose-built apartments. They're just condos that normally would have sold to the average home buyer, but they're bought by Bay Street. And now they basically sell them as, you know, shared ownership, which is basically just kind of rent to own, but probably even worse because it's a bit misleading. So, you know, when you have capital like that buying up housing, and this is kind of what I mean, it starts disconnecting house prices from incomes, because income's not a constraint for Bay Street, right? I mean,
for investors,
rents are more of a constraint, but they just end up putting more capital down, because unlike mom and pop investors, you know, Bay Street's not fine with cash flow negative properties. They needs to be neutral. So they're going to put 40% down, which is fine. And they'll take the slightly lower returns because it's less leverage, but that's what they'll work with. So yeah, I think we need to look at all of these factors when we're thinking about what's potentially might constrain house prices tomorrow.
Yeah. The point is we have to update our thinking. That old rule of thumb, you know, income times, you know, or income being the factor on home prices, the major factor, it's changed. Yeah. So it's important to notice that. All right. Question 3, I'm grouping these as, aren't you missing the coming recession part of the real estate discussion, John? Okay. I think people think you're very optimistic. I know that you chuckle. I know you chuckle a lot, and maybe that's misread, but
all right.
So I'm going to read a couple comments from our viewers to our YouTube channel recently. From Robert Chesney's, great info, but where was the discussion on the economy? Employment has the biggest effect on home prices. And from Rich Pickard, jobs, jobs, jobs. It's all about the jobs. If you could bring a guest on that is an employment analyst, that would be great, because realtors are always going to lean positive for real estate to come back. John, you're a realtor.
Oh my.
So Jacques Hughes.
Some of these comments are funny. I mean, so for the record, I mean, my view on the market, I mean, when I look at macro views, I don't do macro forecasting. I just try to look at what most economists are doing, and I try to look at what the consensus is, right? And the reality is, if you look at the consensus, most macro economists in Canada are not forecasting a massive deep recession where unemployment hits double-digit rates. Okay, like unemployment's at a record level right now. One of the reasons we have problems economically with inflation, like, is because job growth is actually much higher than the Bank of Canada wants it to be, right? So are jobs going to be lost? 100%. Are, you know, I mean, I don't want to say 100%. Most likely, we're probably going to see job losses because TIF wants people to lose their jobs to cool inflation. You know, but what does that look like in the future? And is that going, you know, and I think this is what's interesting about these platforms. I find, because I'm pretty active on Twitter, there is I think a group of people are very, I mean, I'm not overly confident in my ability to predict the future. I tend to be very cautious. But a lot of people are very confident. And I think there's a lot of confidence that we're going to hit this US type financial crisis where unemployment's going to go through the roof and people are going to be just giving up their homes and mailing their keys back to the bank, and there's going to be mass defaults. And I'm not as convinced that that's the case. I mean, the fact is, the last time we had double-digit unemployment was when? 3 years ago. You know,
During COVID.
During COVID. And what the hell happened?
Yeah.
You know, the market exploded. I mean, who predicted that? That's not supposed to happen. And no, it wasn't everyone buying homes off of CERB payments. I mean, yes, CERB and the deferral on mortgages for people who lost their jobs certainly helped people keep their homes. But the fact is, you're not supposed to have a housing bull market when unemployment's in double digits. So again, going back to this idea that everything is one-to-one. Once unemployment hits a certain level, we're going to have this massive crash. I mean, yeah, it's very possible, but it does. I mean, there are so many other factors that influence housing markets and house prices. And I think COVID, if nothing else, I mean, I was bearish at the start of COVID. Most people were bearish. Most people were worried about a depression. And the market did the exact opposite. And in hindsight, we say, well, obviously rates went to zero. That's going to happen. But it's, you know, again, it wasn't that obvious in the moment. You know, most people were very pessimistic, including most people in the real estate industry.
Yes, I mean, I know, and viewers and listeners are invited to look at our YouTube channel where we hosted, Move Smartly hosted a major conference, a virtual conference at the start of the pandemic, interviewing top economists across the country about their predictions about what would happen. Now, when we then re-interviewed these economists, 6 months later, because most of them had predicted that prices would fall, that we would see tremendous pressure on real estate. And in fact, after an initial lull, we saw one of the biggest booming markets we've seen during the pandemic, which is very confusing. And I recall the economists saying, we made some mistakes in our assumptions around job loss. We did not anticipate the number of workers that could continue their employment at home, which tend to be the higher earners that could hang on to their jobs. And that it was a lot of people that were in the entertainment and frontline industries that faced job loss and were able to sort of leave their rental units and move in with people. So you saw, and they revised it after. There is a limit to models, right, John? Like there's a limit.
Yeah.
And on top of that, I think some are talking now about the changing, whether there's employment is undergoing some structural changes. And that's why we're seeing some patterns that are confusing to people.
Yeah. And I don't, and listen, I'm not making a prediction. We're probably going to see the unemployment rate increase. And the question I think we have to think about for people who follow the market, the question is going to be, to what extent does that lead to people being forced to sell their homes, right? And is that enough to cause like a massive decline in the market? And I think this is where, and again, I don't think that's the case, partly because most macro people I read don't think that's going to happen either. I think most people who follow this channel who are hoping for a crash think what happened during the US financial crisis is what's going to happen here. And I'm not going to make predictions. I mean, is it possible? 100% is possible. We have to be open to every possibility. I think it's less likely, just given what's going on in the economy. I think there will be some distressed households, some distressed investors. We'll see distressed sales pick up. I think it's going to be like a wave of distressed sellers. I'm not as convinced it's going to be like a tsunami of tens of thousands of homes hitting the market, the way some people think. But to each their own. I think people need to follow whatever forecast they kind of buy and believe in.
Yeah, I mean, and the important thing you said there is, what is the likelihood that the job loss will entail pressure on home owners and force that distress selling? And in my recent interview with mortgage expert Ron Butler, he pointed out reasons why he doesn't believe a 2008 U.S. crisis is likely to happen here, even if we see an economic downturn of some degree. And that's because there's other differences in how, mortgages are issued here, and also the equity that Canadians have built up, right? And also the stat, John, how many homeowners own their homes outright in Canada?
Significant. Yeah, exactly. Yeah.
So there are a lot of factors that people, now, does that mean that there couldn't be a run in an area that turns into a bubble and a collapse? You actually pointed one out in 2017 in the York region, Richmond Hill, Markham area.
For sure. And
that can happen.
And to be clear, I think if we think about what might cause a decline in prices more, I actually think it is probably more behavioral than fundamental. Okay. And what I mean by that is, I don't think it's going to be, like to Ron's point, this massive surge in people just giving up and walking away from their homes. Right. I think, if we look at what happened in 2022, prices declined largely for behavioral reasons. Buyers got spooked, pulled out of the market. Sellers got caught in two transactions and became desperate. This is largely why prices fell and why it was contained in a short period of time. So if panic hits the market, if investors get worried, and we saw this at the start of COVID, when rents started plummeting at the start of COVID, and there was a fear that we're going to have this sustained downturn, investors rushed to sell their units. They were just dumping them they want to get out of the market as quickly as possible. That actually contributed to the decline in prices. And again, that was not a fundamental shift. That was just driven by panic, right? Mm-hmm. And if we see like a big turn, a negative downturn, I think my instinct is it going to be driven by panic behavior, those things, rather than unemployment hitting 14% and people have to throw their keys in the mail and give it back to their lender and walk away. I don't think that's going to happen. I think you might get some panic and people freaking out, and that alone could kind of push prices down. I think, and again, I hate making predictions, but my guess would be if we see it, it's more likely to be along those lines than some massive economic event, personally.
All right. Well, you said it. So we're going to see how well that ages, as people like to say. They're going to get a lot of these.
This didn't age well.
This didn't age well. People are very good at clipping those out. So, all right. I'm going to go on to the next kind of grouping. Question 4, paraphrasing. John, you apparently have no clue about what drives rent prices.
Oh my, we're getting a lot
Cool
of
Dude 505 says, John got it totally wrong. Rents are not dictated by interest rates. They are dictated by the state of the economy. Rents only went up like crazy because of pent-up demand and rising goods inflation. As interest rates rise and economy comes to a halt or goes into recession, rent inflation will go down. So it's Cool Dude right here, and he's telling us something about rents that
Cool Dude is 505 is interesting. I mean, I find a lot of these comments interesting because, the people who kind of come on the channel, I guess it's just the way people consume information. I mean, when I see something that I don't agree with, my instinct is to think about, why did that person say that? I don't get it. What am I missing? Right. Mm-hmm. Whereas most people's assumption is, he's an idiot. And which is kind of what Cool Dude 505 said.
Or to be fair, a lot of us think I know the answer, and
I know the answer.
I think that's
I mean, and Cool Dude 505, quite frankly, is rather. I mean, he's right about one thing. I mean, there isn't a one-to-one relationship between changes in interest rates and rents, right? So sure, if the Bank of Canada raises rates a quarter point, in a normal year, does that leads to any massive change in rents? Of course not. I mean, obviously, in most economic models, and especially in these time series models, there's no direct one-to-one causal relationship. So let's be clear. If anyone interpreted it, I think one thing inherently causes another. I mean, it's never that simple. But beyond that, the fact is we actually have a very good case study of how changes in rates impacted both the housing market and rents. When rates got pinned to the floor by the Bank of Canada, thousands of buyers rushed into the housing market. Well, what does that do to rents? I mean, rents plummeted. I mean, and it largely plummeted because people rushed in to buy homes, right? And when rates did the opposite and the Bank of Canada spiked rates and buyers moved to the sidelines, I'm not buying now, the market's crazy. Well, some of those buyers still need a place to live. And what did they do? They rented. And which is partly why rents are up 20% per year. So, I mean, this idea that they are unrelated, I mean, to me is kind of funny, especially when you have these massive swings. I mean, and to his point about, rent, I can't remember, he opened it up, like rents are not driven by rates, they're driven by the economy. I mean, give me a break. I mean, the path of interest rates are driven by what's going on in the economy, right? They're not changing them on a whim. It's not like Tip is sitting there flipping a coin what's to do with what interest rates. I mean, the path of rates is entirely driven by what's going on in the economy. I don't know how to put it more simply and more plainly. So yes, is there a one-to-one relationship? Of course not. There never is. But are they very connected, especially when we see these dramatic swings? I mean, I'd love to hear someone's explanation explain it. To me, it's not only it makes sense economically, it's what we see on the ground. A lot of our clients hit pause buying a home and rented. I mean, this kind of fueled rental demand. So certainly there's a relationship.
And actually, John, this chimes into something that Sean Hildebrand of Urbanation, a major GTA analytics firm, especially in the condo and pre-construction and resale sector, was talking about at a recent presentation, saying that the growth in high income renters is very notable in the GTA. And that a lot of these renters are now people who probably cannot afford or don't want to get into the market at such high interest rates. And what do? You turn around and rent. And some of these people are not willing to delay the quality of their life. So they're renting, and pushing prices up in certain locations and buildings. And right now, Toronto is undergoing a really crazy rent increase, as we're seeing. So a lot of people are stuck. The people that normally would like to move on to buying and to not pay rent anymore can't. So, I don't think you're the only one saying this, and we'll keep tracking that issue here too. All right. Well, we're almost out of time. So I wanted to introduce Troll Corner.
Oh, no. Okay.
The rest were just, I think, while again, some people could mind their P's and Q's a little bit better. There were some good questions in comments that we've heard from, but some are just, they go into another area. So John, are you just a housing bully two shoes? Question.
That's
Jimmy Bags. That's my question. That's my question. Yeah, that's my opener. That's what I'm grouping these comments. The accusations that you are a bull, and you can tell us what that is. But Jimmy Braggs notes that over the last year, John has expressed optimism about the housing market on several occasions. He has been wrong every time. And Nikki Ferlando says, I've noticed the same thing. These are comments on our YouTube channel. I mean, I'm not sure they're watching the same John I've been watching, but over to you.
So, I mean, these are quite funny because, again, similar to the last one, I mean, it's interesting people's views. I will admit when I've been wrong about things, and maybe when we wrap up, I'll kind of admit to a big mistake I made. But most of these, quite frankly, are misunderstandings of what I'm saying. Okay. And this idea that I've been optimistic or a bull is actually quite comical. I mean, if you look at, I started the year, I mean, this quite frankly is the mistake I made. I started the year in January with in my report and in our YouTube channel, you can view it, of things to look out for in 2023. And all of them were pessimistic. The idea was that we have to look at, I don't do forecasts, but the idea is to look at what are the most likely, what are the possible outcomes? And the possible outcomes are prices decline, prices stay flat, or prices will increase. And the whole idea with the video and the post was, well, what are the events that will likely lead to one or the other happening? Now, I thought prices increasing was so unlikely that I didn't even comment on it. I mean, to me, the only outlook was down or flat. And for most people, that is not bullish. I mean, that is relatively bearish long-term outlook. I mean, even if someone viewed our recent sort of monthly live update with David LaRocque, I mean, obviously, I'm concerned about the longer term outlook. I mean, rates take a long time to work their way through the system. There's economic uncertainty. Even now, bond yields are going up. That's going to impact the market. If the Bank of Canada has to keep hiking to keep up with the Fed, that presents other risks. So there are 1,000%. The longer term outlook is bearish. Anyone who pays attention to what I've been saying is concerning. I think where most people get confused is that when I talk about the market, what's going on right now, and if I talk about the market being busier than expected, most people's assumption is that I'm bullish, right? And they're confusing my opinion about the longer term outlook versus what's happening right now. And this, again, I think partly has to do with, I think intellectually people struggled with this duality that a person can be bearish or concerned about the long-term outlook, but is actually just commenting on, and the commenting on trends right now isn't even an opinion, it's actually what's happening. So when I comment on the market being busy, prices are actually rising a little bit, people are interpreting that as me being bullish when I'm just telling people what's going on.
The criticism, John, that's been raised is
Yeah.
you often state that when the market starts to get volatile, tracking on a weekly basis rather than by monthly stats becomes important. Now, the accusation is that cherry picking? Is it looking at a few weeks that had seen good sales to extrapolate too much from that? Can you tell us more about your practice and how you use that and why maybe that informs your comments when you say things are busier?
You have to look at, so when markets are volatile, you have to look at weekly statistics because it especially when the market's moving very rapidly, the market can change significantly from the start of the month to the end of the month. Okay. So last year in February and in my March report, people can look it up, when I actually started commenting that the market was turning negative, no one was complaining about me commenting on what's happening on the market real time because the tone was negative. And I think that's the funny thing about social platforms, is as long as the picture is negative, people are pretty happy with it. And that was the fact is, when you looked at the data, the market was cooling, and it was very obvious in February, March. I mean, I didn't predict prices would fall 20%. I mean, these things are unpredictable, but you could see the signs that the market's cooling. And when we look at the market today in January, February, the market is actually doing the complete opposite. Demand is outpacing listings. I looked at the data for February, and this is just off the top of my head. I believe it's something like sales were from January to February. I think sales were up something like 1,500, while new listings only increased like 500 or 600, right? And again, what is this doing? It's causing inventory to plummet. It's causing more bidding wars, more competition, and I'm noticing prices edge up. This is not me being bullish. This is just what's happening in the market. If people don't want to buy it, all the power to them. This is what's happening. I can't explain it. And like I said, in fact, this was a mistake of mine. I was so confident that this is impossible. I didn't even consider this as a possibility when I told people what to look at in January, and that was like 2 months ago. So if people want to talk about what did not age well, they need to focus on that, where I was overly pessimistic perhaps about the market and I didn't anticipate this. Now, again, is 2 months going to make a trend? Of course not. I think people, again, I mean, these platforms are funny because you cannot take what's happening right now and assume this is going to extend for 9 months. We already know that. And I've already said it's probably going to cool down. Like this heated, start of the year is actually very normal. We didn't expect it because rates have been so high. Usually February and March are the most competitive months in the year because that's when most people start their search and there's the fewest listings. I didn't expect it happening this year because of everything that's going on economically. So the market's probably going to cool. We're probably going to see more buyers pull out because 5-year rates are going up. We're probably going to see more listings. I don't know what's going to happen, but I don't think this whole heated craziness is going to continue. I think it's short-lived, but it is what it is. It's happening, and it's the opposite of what we expect. That's the important thing. You know, we've talked about how it takes time for the market to absorb rates, but the reality is things happen gradually. People don't mail the keys in and you have a power of sale. People, when they're distressed, they start listing their home for sale to sell before the bank takes over their property, right? And we're not seeing that, right? And the market's not doing what it's supposed to be doing. I mean, if people think that's obvious, all the power to them. I don't think it's obvious. I find it confusing that the market's behaving the way it's behaving, because it's not supposed to be like this right now, where demand is outpacing supply at the start of the year after all the hikes that we've seen. And it's just, to me, it's interesting.
Yeah, and viewers and listeners can tune into your last live report in February, where you noted that normally this does actually happen at the start of the year. Your prediction is that it wouldn't, because we've seen unprecedented interest rate hikes and incredible changes to Canadians' household budgets. You know, and lo and behold, we're still now in this weird situation where we're seeing bidding wars in Toronto and Vancouver again. So definitely bizarre. I appreciate you taking on the tougher questions. I'm going to keep them coming at you. I do think I do think there is always value in asking the questions that we might be thinking, because on the flip side, what may be obvious to you or an economist or things like that is not always obvious to a consumer. You know, there are a lot of you know, just natural assumptions that you think should work. And it's important to kind of challenge them and say, oh, okay, well, you know, certain mechanisms that used to work a certain way or relationship directions are changing. Yeah. And that's what, you know, people are noticing. So it's important to, I think, respond. So I thank everyone for their questions and their comments. You can, we're going to resume looking at more detailed cases again, like we normally do on the situation. So whether your questions are big or small, more about your personal issues, keep them coming. Ask John at movesmartly.com, and we will talk about them on the next episode of The Situation.
Awesome. Sounds good.
Yes. And to close, I must say, John, obviously we've been at this for a long time. I don't think anyone has heard you speak more than I have. And I can definitely assure everyone that sometimes John is wrong.
Sometimes John is wrong. I mean, especially about the predictions about the future. I mean, those, which is why I tend to not try to predict the future, and I try to predict, you know, potential outcomes. But yeah, 100%. Certain things about predicting the future never age as well when I'm trying to predict Toronto's housing market. So I try to limit that for sure.
I was talking more about your ability to, you know, predict sports outcomes. But anyway. Yeah. Thanks to everyone. Thanks. Keep listening, keep watching, and keep your comments coming.
Sounds good.
We'll catch up with you soon. Thanks. Bye.